Okay. Through the Gates of Delirium, Section 6.
Mm-hmm. P-Tech, Course 4, Student Outline, Section 6, Discovery Techniques, How to Find Personal Property. Learning Objectives. Know the inspection components to note in a physical inspection during a reappraisal. Know what prior year records in conjunction with renditions and other gathered data. Explain how multiple discovery methods are required to have a successful discovery program. This section explores how to locate personal property since it presents more challenges than real property. It reviews ways to physically locate the property and, when that is impossible, ways to make good decisions about what should be there. A. Annual canvass, reappraisal, field review, and inspection. Number 1. Regardless of the term you choose to use, this process is the best way to discover or find personal property within the appraisal district that must then be appraised. This is the process of getting out and driving or walking the streets within the jurisdiction to ascertain where personal property is or should be located there on the appraisal date of January 1. Discovering taxable personal property often requires riding by, walking through, counting, comparing square footage, and physically inspecting the premises near the assessment date. A. When the appraisers are in the field, they verify that existing businesses are still operating at the same location as the previous year. B. If a business has moved or ceased operations, the information is noted and the account corrected. C. If the appraiser identifies a new business, a new account is created for that specific location. D. The review should be conducted as close to the appraisal date as possible to ensure that the property's situs has not changed before that date. Number 2. Typical steps in an annual canvass or review. A. Set up a work roll or some other list of taxpayers by street address to take into the field to record new taxpayers and remove those from the previous year who are no longer in the jurisdiction. B. Visit each address and interview someone with knowledge of the business to discover if there is any property at that address not owned by the taxpayer, such as leased equipment or property belonging to tenants. C. Obtain the name and address of all leasing companies, type of equipment leased, and payments for each item leased. D. Ask permission for a physical tour of the premises to get an idea what is to be appraised. Be able to set an estimated appraisal in case there is no rendition filed. E. Try to obtain the square footage of the premises to help in estimating the appraised value. F. Get the correct business name and address so that the rendition is sent to the right taxpayer. And G. Make a note of the name and phone number of each person interviewed. B. Self-declaration or rendition of personal property, Tax Code Section 22.01. Number 1. Filing. A. Texas law requires that all property shall be rendered if it is used in the production of income. B. A rendition is a form used to report taxable property owned as of January 1, unless the chief appraiser has granted a September 1 inventory appraisal. Renditions should be sent to the owner of every personal property account on the prior year's appraisal roll and to personal property owners discovered in the canvass. C. Appraisers can request owners of personal property to declare as of the assessment date all business personal property owned or controlled by them or in their possession, and all leased, loaned, and fully depreciated items. D. The rendition form puts the responsibility of declaring all taxable personal property directly on the taxpayer. Some appraisal districts provide an online filing application to electronically process renditions. Number 2. Failing to file. A. Late filing penalty of 10% of property's annual taxes. B. No filing penalty of 10% of property's annual taxes. C. Fraud penalty of 50% of property's annual taxes. D. Evasion penalty of 50% of property's annual taxes. Number 3, deadline for filing. A, April 15th is the primary deadline for counties.
Okay, go ahead. Yeah.
Did I say something wrong?
No. Go ahead.
A, April 15th is the primary deadline for counties where no taxing entity grants the Freeport exemption. B, April 1st is the deadline for counties where at least one taxing entity grants the Freeport exemption. C, owner may request extension to May 15th, May 1 for counties with the April 1 deadline. D, deadline may be extended an additional 15 days for a good cause. And E, appraisal district may not send a notice of appraised value until deadline is passed. Number 4, what is the required information? A, the property's owner's name and address. B, general property description by type or category. C, if inventory, a description and general estimate of quantity. D, the property's physical location or taxable situs. And E, the owner's good faith estimate of the property's market value or, at the owner's option, the historical cost when new and the year of the property's acquisition. C, telephone survey or audit. Number 1, appraisers review renditions and note any reductions in value from declarations in previous years, rounded figures, or incomplete returns. These can be checked by making a phone call. The taxpayer can correct clerical errors, unlisted property, or undervalued property and send any documentation requested for verification or to complete the rendition. Number 2, the form of audit represents one of the quickest and least expensive ways to discover personal property. D, correspondence audit request by mail. Number 1, form letters and individual correspondence are used to obtain information to verify a taxpayer's rendition. Additional details, if needed, can be requested by correspondence when a taxpayer's rendition is reviewed. E, review of published sources. Number 1, published data can be a valuable source of information to help with discovery. Local as well as regional or state sources may lead appraisers to businesses which would not be apparent otherwise. Some of these data sources and discovery techniques are A, searching newspapers, business directories, or telephone directories. B, cross-checking businesses' lists in directories against the appraisal roll of business accounts. C, cross-checking the appraisal district's list against the business license list to find names of businesses to research for unlisted property. D, if possible, obtaining lists from airports and marinas showing the name and address of any business that has unlisted planes or boats in given location on the appraisal date. E, obtaining tenant listing from office buildings, malls, and warehouses. F, reviewing corporate charters by using a list of the new corporations. The appraiser can discover businesses even before they file tax listings. Obtaining discoveries on their property by following through on new names. G, reviewing chattel mortgages or uniform commercial code forms that are generally recorded in the district clerk's office. These describe purchase and finance property and certain types of leases that allow identification of purchasers of personal property and may be cross-checked against tax returns for reporting. H, looking at the prior year's appraisal roll. I, reviewing personal property renditions. J, searching the comptroller's sales and use tax account listings. K, using other government agencies that may provide good resources for discovery. L, research involving the internet. Number 2, all regulated trades have licenses. F, detailed accounting or book audit. Number 1, in many states, the authority to audit the financial records of businesses is an option available for appraisers to aid in the discovery process. However, Texas does not grant that authority to appraisal districts. If, however, a property owner voluntarily submits to an audit, here are some of the things to remember. A, auditing is cross-checking numerous accounting records against each other and then verifying information by physical inspection. B, appraisers conduct a brief office review of all declarations to ensure complete renditions and proper compliance. C. If renditions are not complete, appraisers note it for further investigation. D. The results are discussed with a company official and any discrepancies are resolved. G. Discovery challenges. Number 1. Generally, the most difficult type of property to discover is leased equipment. Knowing which pieces of equipment are leased and which ones are owned can be difficult. Many times, leasing companies fail to render. Number 2, to maintain equity in personal property appraisal, an effective discovery program must be enforced to ensure all leased equipment is on the appraisal roll. Number 3, personal property discovery is more difficult than real property discovery because personal property is usually movable, small, and easily hidden from view. Number 4, a listing of assumed names used without other information is not a good source of personal property discovery. Number 5, it is often difficult to determine the nature of the business from an assumed name. Number 6, it is important to cross-check property under assumed names to see if it can be reported elsewhere. Number 7, assumed names are frequently taken by individuals, but the business is never established. H. In summary, discovery or finding personal property can present a number of challenges. The obvious problem is that it can be highly mobile, but even if it is stationary, the nature of some businesses can make it hard to make contact within the time allowed to conduct inspections. Methods that use the phone or correspondence by mail or email can assist in discovering personal property, but information may also need to be drawn from reports and other resources. End section.